Hi there, and very warm welcome to my channel Simply Stocks. And today I'm going to talk about a potential mid cap stock in the pharma domain, which is a small cap at the moment and has come down from the top, but is doing reasonably well in a sector which has been an underperformer for the last 15-18 months. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Kaplan Point, here's a small request. Kindly support me on Patreon. Once you do that, will help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon or get membership there, you can get the WhatsApp membership by sending me an email, and that's a yearly membership. Now about the company that I want to talk to you about is CAPLIN Point Labs, and this is into the pharmaceutical space and had been doing well from 2013-14 onwards, but had gone into a complete consolidation over the last 2-3 years. So let's understand as to what happened to the business that the company as a stock did not do exceedingly well over the last 2 years and what lies ahead. So, the company was established in 1990 and they provide pharmaceutical drugs in regulated and emerging markets. They are awaiting US FDA approvals on many facilities, but currently they exports to Latin America, Europe, and Asia, and majorly to Latin America. The market cap of the company around 5,000 crores, which attracts me at the moment because it was at around 9,000 crores not far back. If you look at the financials, then these are Q2 numbers, the September quarter numbers for this year. So sales went up by 20%, which is decent, and profit also grew by around 19-20%, and that is why this stock comes into the domain that I feel is looking extremely attractive, and that is probably why the stock has not fallen that much. It is a zero debt company, as most pharma companies are. A low promoter but high institutional holding at 40%, ROE of around 23%, margins at around 30%, and that is why I feel that being having a margin of 30%, profit growth of around 20%, the stock cannot trade at a PE of around 19-20, which is trading at the moment. So there is an upside that is there in the stock, and the stock has been consolidating for a while. I'll discuss about the technicals later on in this presentation. If you look at the results, so let's look at the results at a glance at the Q2 numbers. So margins were down 400 basis points year on year and are down 100 basis points quarter on quarter. So there are margin pressures, but since the sales growth has been pretty good, the bottom line has grown over year on year, but margins have shrunk, and probably this is one of the bigger reasons or the major reason as to why the stock has not performed. But you need to understand that most of the companies in the pharma and IT domain has faced margin pressure because of high competition, high raw material cost, and the condition or the geopolitical condition in Europe, especially in Russia, Ukraine, etc. Sales growth of over 50% from FY19 is decent enough in a very competitive market in this, you can say, pharma consumer market. Sales growth of 50% is pretty good, considering as to how things have gone about post the pandemic, especially in the last one year or so. All divisions are performing well in a tough environment. They are doing pretty good, and demand should pick up more from FY24 and onwards, I believe, as global economy becomes more stable, as rate cuts reduce and we move towards, sorry, rate hikes reduce and we move towards rate cuts in US and Europe. I think things should get better for pharma and IT. So that this is why it is better to get into these sort of companies at this point of time, if you are even a medium to long term investor, rather than wait for a big move of 40-50% and then get into the company, so then getting into the stock. So I believe numbers are set to improve from FY24 onwards, and it's a clear play on global economy. If you believe as I believe that in the second half of this year, calendar year, global economy should recover, then one needs to look at these pharma IT companies in a big way. Yesterday, I put up the IT video with mid-cap IT picks. So similarly, some of the pharma companies are coming at attractive levels. I'll put up a video on mid-cap pharma picks as well later on in this month. So if you look at the revenue picture, it has grown around 80% from you can say levels of around 650, 85% growth over the last 3 years to around 1270. So the growth has been steady in revenue, and it has been around say 22-23% CAGR, whereas it was more than 25%, closer to 30% in its heydays. So this is one thing, that the growth in revenue has slowed down, but one needs to understand as to what kind of environment that they are working in. In that sense, they have done reasonably well. If you look at the profits again, from around 180 crores, it's around 300 crores. So this is a jump of something like 70% or so. So this is no mean feat in 3 years to grow like that around 18-20%. One needs to again understand that the pharma sector did exceedingly well till FY21. So that's why this growth between 2020 and 21, we had from 215 crores, we had a jump to 251 crores. But they have maintained their profitability growth even in difficult times. From FY21 to FY22, there have been a 20% growth in profitability. So quite a decent growth chart that we are looking at. And this is what I like, that some stocks or some companies that grow consistently 20-25%, they end up compounding your wealth in a better manner without sleepless nights, rather than those companies that have exaggerated profit growth and then some plateau. In terms of margins, and this is where the picture turns, and probably the reason why the stock hasn't done anything over the last couple of years, the margins were in 36% around in FY19. It has dipped to nearly 30% in the last 3 years. So there has been a good 600 basis point or 20% dip in margins, and that has led to the valuations getting cheaper. That has led to the PE contraction that we have seen in the stock. But overall, I believe that we saw in FY20 margins to be 30%, and now it is hovering around 30% for the last couple of years or so. I have a feeling even in FY23 it will be around 29-30%. So I have a feeling we are bottoming out on the margins front, and probably will do that by the end of FY23. So that is why I put up or come up with this video, that I believe that on the margins front, which has been an Achilles heel for something like CAPLIN point, we are going to bottom out, and then we should see a surge towards 35-36% over the next 2-3 years. So from a 3-4 year perspective, the stock looks attractive here. So if you look at the revenue breakup for the company geographically, and this is why this attracts me even more, 87% of the business comes from Latin America. So very less business that is coming from US and Europe, etc. US or America contributes around 8%, and majorly around 5% comes from Africa. Very less from Asia, 1 or 2% comes from, less than 1% comes from Asia, but they have a lot of you can say orders in the pipeline, A&DA in the pipeline from the Asian region as well. That's why I put up in the first slide that they have some business in Asia as well. So most of their business from Latin America, and it is doing reasonably fine compared to what is happening in Europe and US. And that is why the stock hasn't fallen sharply, and the fact that the numbers have been pretty decent. So after looking at the revenue breakup and where the company probably have their major business, let's look at what we have installed for you next. So this is the channel wise breakup, revenue breakup for the company as to how the business is done. So distributors or distribution of the products is done by around 60% of their people, whereas direct pharmaceutical sales contribute to around 20%, whereas you have tenders or tender orders that come in, or government orders, tender orders, etc., from Latin America, and even some from India. So some of the business in Asia and India. So their tender orders business is around 20%. Major comes from Latin America, majorly, and the US. So all these kind of, you can say, channel ways of making money is done by Kaplan Point. So this pharmaceutical sales thing that comes 20%, that is going to go up once Europe US recover, because it's a high margin business that they do in America. 8%, around 3.5% of that 8% comes in from there. So we'll see how things pan out over the next 3 years or so. In segment wise thing, if you look at generics, contribute around 75%, whereas brands contribute 25% of their business, and they are trying to bring this closer. So generics might contribute less 3 years down the line, around 70% or so, and 30% would come from their brand. So they are working or doing their research and development R&Ds on their brands, and bringing in more brands, direct pharma products or medicines to the market. So that is also a positive that we look forward to. So some of the important pointers with respect to the company. The company boasts of pharma products with 4,000 plus registered products, 650 plus formulations. So it's doing pretty big in this business. They have presence in 26 therapeutic segments, and it is globally represented by subsidiaries or sales partners in 18 countries, and that's why we have those distributors and partners. But they are distributed into 18 countries, so probably most of Latin America is covered. We have Canada and Mexico in the North America, where they are doing work around with USA. So there are many countries that they work into. And the best part in here is that they outsource 60% of these products from various partners in India and China. So what they do is they do not directly make these products, but outsource their manufacturing, etc. From you can say outsource it to China and India, and most of their, you can say, manufacturing plants or manufacturers are in these two countries, and then they probably sell it. So their cost gets reduced sharply. 40% of the products are produced by companies' manufacturing plants, mostly located in India, that they manufacture in, and then they distribute, or you can say sell or export it to the Latin America or the Central American region. And the company exports 60% products from India, and the rest 40% is exported from China. Now this is where there is a bone of contention, that with the things that is happening in China with respect to the pandemic, things could be up and down for a while with respect to sales from that region. So we'll have to closely watch that as well. So if you look further into the company, then it has 15 approved ANDAs in the US. So it's not that they are not working at all in US. There is business coming from there. It has also launched 8 products in the American market, which is a highly regulated market. So hopefully that business would also bring fruit in FY24. And it targets to improve presence in the US by 2023 with 30 plus ANDAs likely to be approved. So probably this year could be big for the company with more ANDA approvals by the end of the year. So I think FY24, FY25 could be very big for this company. The company has 8 manufacturing facilities in Tamil Nadu, Pondicherry in India, and in Hong Kong, Colombia, and Singapore. So they have manufacturing facilities globally, and in a very interesting location, like from Hong Kong, they can distribute their products very easily to other parts, because the distribution network from there as a metropolitan country is pretty good. And there is a total capex of 300 crore that is in the pipeline, which should be executed over the next 2 years, and that should bring in a lot of revenue as well. So a good overall, a very good investment perspective stock from a 2 to 3 year perspective. In terms of the valuation, so currently the EPS for the company is around 40 rupees. Expected FY23 EPS to be close to around 48 or so, 47, 48. And it is currently trading at 15 and a half times FY23 earnings, which is not very expensive at all. FY24 we should see more growth and traction in profitability. I believe that in FY24 we should see an EPS closer to 60 rupees. And even if the stock trades at a PE of 25, which is a very reasonable expectation, we should see the stock go to 1500, which is a double from here by the end of 2024. So in the next 2 years the stock could easily double from the current levels. There is a risk of global recession that do persist, that if global things really go out of hand and we have problems in Latin America, then the stock would catapult big time on the downside. So one has to be very careful in that, and that's why probably keep a stop loss according to your risk appetite, but can be a very decent trade from these levels, Kaplan point. So in terms of technicals, if we look at, there's strong support around the 670 700 region, and it is at currently at very critical supports, and that's why even technically it looks pretty interesting, and one can accumulate. From a short term basis, one should look at the stock above 780 800, not before that. But from a long term basis, there are short term supports at 680, but from a short term basis, once it surges 10-12% only, then get into the stock. On a long term basis, around these levels one can definitely accumulate. So from a 3 year point of view, it is a buy at these levels and in staggered manner on decline. Short term as well you can buy, but probably buy more above 780 800. It is a high risk investment because if global recession continues and it percolates down to Europe and you can say percolate down to Latin America, then this is a big problem for the next couple of years for these companies to perform. But I think there should be recovery from the second half, and that's why I'm confident on the stock doing well. Allocate less than 5-7% into this holding, so that even if you lose, you don't lose big by putting money in here. So this is a video on Kaplan Point Labs. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon, and you can join the WhatsApp membership as well. Thanks a lot for watching.